Let's get some analysis on the markets and how they're trading for today. Joining me in studio, as we usually have on a Friday, is Carl Burgess, Portfolio Manager at Nedbank Private Wealth. Carl, always a pleasure to have you with us.
Good to see you again, Giga.
I think just a few weeks ago we were talking about how fantastic July has been, and we obviously got off to a positive start in the month of August, but goodness, how things can certainly change in a matter of weeks.
Yeah, absolutely. I mean, we started the week at record levels. So basically in developed markets as well as emerging markets. I mean, the emerging market rally has probably been a bit weaker than developed markets. So certainly some saber rattling from North Korea, between North Korea and the US, put a bit of a dampener on that. So that's a bit unfortunate, but certainly due a pullback.
What do we do then in these particular times, especially given what we're also expecting regarding Moody's and its view on South Africa?
So I think it's just important to kind of keep an eye on fundamentals. I mean, politics and, you know, the rand volatility has been with us pretty much for the last 3 years, and that's really what's provided this sort of volatility in the markets for us. So I don't think it's reason to kind of change your outlook on the way things have been going, but I think enjoy the returns, but keep a close eye on where they're coming from, I think, at the moment.
Are there any opportunities of value? One is assuming that Naspers might be a nice one to pick up, given that it did push that 2,900 level earlier this week.
Yeah, so we really like Naspers, and I mean that's you know, it's a massive part of the market. So I think in most portfolios, you know, it should be a core holding. But just having a look at it, there's obviously some news out late yesterday that the Chinese government is investigating them, Baidu and Sina Weibo, which essentially are the three big operators in China. So this is not something that's sort of new to China or the Chinese government. I mean, earlier sort of in the year we saw WhatsApp not being allowed to operate there, and Tencent and WeChat benefiting from that. So the stock pulling back about 4% overnight, and that's following through, you know, with Naspers coming back about 3.5%. So I think keep a close eye on it. I don't think there's enough information out to really make a strong call on it. But, you know, just talking about Naspers, there was also some good news out. The Flipkart, which is a holding that they have an interest in a company in India, received a $2.5 billion cash injection, which bolstered their balance sheet to about $4 billion. So they can, you know, continue to aggressively defend their sort of territory against the likes of Amazon. So some good news, but unfortunately it's been overshadowed by that. But I certainly think it's something to keep an eye on, because if it does pull back to somewhere close to those sort of 2,400 levels, it certainly will start looking attractive again.
We're also seeing quite a few moves in the financial services space. FirstRand share price also pulling back by 1%, and of course the overview of numbers that we saw from Old Mutual.
Yeah, so you know, the Old Mutual released results earlier today. So I think pretty much the takeaways from that is that it's you know, on track for the listing of the Old Mutual Wealth business in the UK and in SA, as well as the Old Mutual Emerging Markets business. So I wouldn't take much away from the share price, you know, pulling back a little bit today. You know, the market is sort of trading in negative territory, and that's really just been you know, following through what's happened in Asia and the US overnight.
On financial services, though, overall as a theme, again plagued by the dynamics regarding the dollar-rand exchange rate, awaiting news from Moody's today. So they're also quite in a precarious position right now.
Yeah, absolutely. And I mean, you know, considering that the returns that we have seen from them, I mean, if you look at FirstRand, you know, that's really re-rated from about 41 Rand, you know, a share right up to, you know, about 55 Rand a share. So that's been great returns that shareholders have seen. And as soon as there's a bit of sort of uncertainty in terms of a ratings announcement that could come out or should be coming out late this evening, you know, there'll certainly be some profit taking, I think. But you know, it's a really important part of our economy. So you know, if financial services can start doing well, you know, possibly pull us out of this you know, recession.
On to another sector that's also seemingly under pressure. Exxaro also had some figures out today, and looking at the share price, not doing too well, 3.2% weaker.
Yeah, so that's a trading statement for the last 6 months, I think, to end of 30th June, I think it was. So they basically guided for HEPS to be between 7.95 Rand and about 9.25 Rand, which is a lot more than the mid sort of 3.50 Rand, I think it was, that they reported last time. So of course this is it's just a trading statement, so we'll have to wait for numbers. I think they're out on the 17th of August next week. So it's going to be quite interesting to see there. But from all the indications of operating profit, you know, looking really good at this stage.
I also want to get your view on you know, what we are seeing regarding some company dynamics. I know Sea Harvest recently made an acquisition from a trailer,
trawler.
There we go, trailer trawler, huh? Mixing up my teas there. And of course what we're seeing with sovereign foods, but not getting into too much analysis, but the dynamics with regard to acquisitions and the, investors looking for value.
Yeah, I think there's certainly a lot happening, still a lot happening in the spaces, but it's not to the extent that you'd like to see it. I mean, the acquisition of a trawler is great, but there's still, if you keep your eye on corporate cash balances, at record levels at the moment. So guys are certainly hoarding cash on their balance sheet, and if you look at that in comparison to what's happening with investor sentiment, it's kind of like a perfectly inverse correlation with that. So I think as soon as you start seeing a bit of a change in that investor sentiment, guys are going to start investing even more heavily again.
What do we do then for the next remaining months of the year?
I think keep your eye on the stocks that you have in your portfolio. I think with the rand being as volatile as it has been, you'll still find some opportunities here and there. But I wouldn't be sort of rushing out to make huge changes. I think maybe just keep an eye on some of the rand hedges that have done particularly well. Something like Richmond, the returns might not be as good over the next 2 or 3 years. So maybe look to sort of trim something. Some of the counters that have really performed well, have a bit more cash on your portfolio.
Awesome. As a retail investor, we always like looking at retail stocks because we interact with them almost on a daily basis. And given what we've seen regarding concerns of economic growth, some job cuts at Pick and Pay, could we see some value appearing from some of the retail counters in South Africa?
I think so. We still think that they look fairly attractive at these levels. Obviously, they're operating in an environment that doesn't really allow for them to fly. But if we actually are awaiting an announcement. The credit retailers actually took the regulators to court regarding some changes in regulation. So that announcement was supposed to be out today. So I think if you do see that announcement coming out either later today or early next week, there certainly could be some positive upside for retailers. But that is a bit of a short-term play. For the long term, I'd just basically continue to enjoy the nice dividend that they're paying out.
Awesome. We'll leave it there for today, Carl. Always a pleasure having you with us. That was Carl Burgess, Portfolio Manager at Nedbank Private Wealth, updating us on the markets as well as dynamics where we could look for opportunities of value. Stay with us, though, because after the break,